You have been fairly confident of the infrastructure space as well. You have some investments in cement, and you were trying for Lafarge as well. So are you upbeat on the infrastructure side?
I think infrastructure, we are more comfortable with the inputs into infrastructure. So cement was one of them. I think that was a kind of a good call. Core infra, we don't do much. We don't do any, actually. Lafarge, we didn't bid, by the way. We were taken out by the CCI.
Yeah.
But yeah, cement, I think, is an input. So you can play the derivative of infrastructure. We are not a core infra player. That's a separate fund of ours, and that hasn't come into India. Having said that, I think infra is going to have very exciting opportunities, because between the government's efforts and the banks, you will find the incubation of some of the new highways and roads. And I think they could get to a stage when you get kind of a rupee yield of, I don't know, 11-12% yield. I think there'll be buyers for that. And dollars can actually come in to take out Indian banks and Indian government that may have seeded pretty significant infra assets. So I think matured infra assets will come on the block in a few years, and there'll be a lot of money available for that, because I think by then the political risk and the economic risk for India will be far lower. You have matured assets, and you will have foreign money coming in and, you know, taking out these assets, I don't know, maybe 9-10% rupee yields.
So you did mention about the government spending, and that's going to really show results. So backed by that particular theme, any particular investment strategy you have in mind, and what's also looking like a bright spot for investments which is still cheap in the market?
The answer to the last question is none. So let's nothing is that cheap. But I think government is spending, you know, in a very systematic way. If you sometimes when you speak to the bureaucrats and the ministers, they have just very well laid out plans of how they are saving on the oil subsidy, and how they're allocating the money towards rural infra, highways, ports and railways. I'm sure it will show up, and it is showing up in cement, it is showing up a little bit in steel. We don't have too many companies that benefit otherwise. So I think, but it has a different multiplier effect. It has a multiplier effect on employment, on construction equipment, taxation, revenues, everything. So I think it'll take some time, but it will show up. So if you really had to stretch that and say what could benefit from this, clearly rural infra will help the rural sector, so rural finance, rural consumption, cement obviously. Yeah, I mean, look, you've got to overall kickstart investment spending. If government is the one that is kickstarting it, I think they're giving a really good signal to people that you either jump on the bandwagon or you're going to be in a way left behind, and you know that's their choice. But it is one way to catalyze the economy again. So the multiplier effect is not really on a sector award, but it can create direct and indirect revenue collection. It can take your fiscal to a different level, I mean downwards, because you get more buoyant revenues. So things can change if this program works well.
So government spending is one bit, and there we do see some green shoots. But when it comes to corporate investments, that's hardly anything is happening. In fact, the IPOs also we have seen, it's most of exits or secondary sales which have happened, and not really for growth. How do you see this particular bit? Is it worrying? And having that kind of a proximity to many of the corporates, do you see that that's going to kickstart anytime soon?
That's a tough question, and that's a really good question. I don't know, but you're absolutely right. The private sector confidence is still not there. You know, my sort of the generous view is that they've probably been plagued by the past and policy changes of the past, a lot of leverage on their balance sheets, failed projects, stuck projects. But the less generous view is that they probably don't want to invest more, you know, which is, I know it's a less generous view to put, but maybe rules of the game have changed. Maybe, you know, they think there are better opportunities overseas. So I don't know. I think that answer is still a very tricky one, and I think it's something that will be very important to realize. If you have to really create the employment, and you have to create, you know, the the income prosperity, the private sector will have to play a role, and it just can't be IT, pharma, and banking. I mean, it can't be. So it's got to be more than that. So I don't know. I mean, I'm myself, we are all watching and waiting. But, knowing the Indian business instincts, I think that if the public sector program plays out well, policy consistency is pretty obvious. Transparency and governance has gone to a new level now. So, maybe people jump in. And I think that's the hope we have to keep here.
But private equity capital has been the backbone. That's been supportive.
In fact, that is the way. If private equity capital, which represents mostly foreign savings, is bringing in more money in 2015 than 14, and 16 is going to be a bigger year than 15, despite the exits, it tells you that people are getting more comfortable with the governance, the transparency, the opportunity, and usually this capital precedes, sometimes it actually lags local capital, but in this case we are hoping it precedes private investment coming back. And if that doesn't happen, then strategics will come in, right? The foreign strategics. So ultimately private equity will bridge that requirement for growth capital, either before the local savings come in or before strategic FDI comes in. That's exactly what's going on right now, and will probably go on for another couple of years before we see which way this thing plays out.
So how do the foreign investors like yourself see India at this point? There are many positives. People have spoken about monsoon, good GST rollout is a big positive. Overall ease of doing business is also what they talk about. But what is it that the investors feel at this point? And what are those teething worries that still persist, which may be stopping some of the investors from coming in?
I think now the challenge really is to find opportunities where the market is big enough. I think one of the issues we have in India is that anything you tackle is fragmented and limited in size, right? So you've got to really hope that there'll be more consolidation. It's a general statement, but I would generally say India needs a lot of consolidation. So, you've got to have that. I think the second thing we have to look out for is reduction in cost of capital. But that's not going to happen just by RBI cutting the rates. Is going to happen once the fiscal comes under control and there is real growth and there is general slowing down of inflation expectations. So that hopefully will happen. Third, I think we need to see more robust capital markets, which will again happen when real savings are available for the real sector and they don't get preempted by the government. So I think the worries are probably more macro now, in the sense, not macro, don't take it wrongly. The longer term macro secular trend has to be lower government, fisc, higher savings, higher local investments, and a more robust capital market, both bond and equities. That's the longer term trend we have to go towards. And then that will drive consolidation, deconsolidation. I think private equity capital you can attract is in billions of dollars. I mean, you're already seeing 15, 20 a year, but I think this can, go up a couple of turns.
How much is KKR looking at investing, say, in this fiscal?
We never give a number. I mean, we are not ever going to give you a number, but we're investing from a $6 billion fund. India gets anywhere between 25 and 30% of that. But we don't have numbers for a country. We just go, deal by deal and do a relative allocation. But if you look at our total investments between our credit business, our special situation business, our private equity business, our real estate business, it's pretty significant. It's a couple of $1 billion there.